Good evening, ladies and gentlemen. John Kelly for Options University on Wednesday, November 30th, 2011. First, the disclaimer. Trading always has been, always will be risky. And the risk this so far has been to the downside as it keeps going down, and everything looked very bleak. And when it looked the darkest, here comes the Fed and the World Banks to the rescue just in time for the holiday season. The Santa Claus rally has upon us. The E-mini responded today to the Fed and World Bank's solution to the liquidity crisis of the banking system in Europe that threatened to freeze things up as we experienced back in the summer and fall of 2008. And you can see the volume came pouring in. The hedge funds, the institutional funds have been on the sidelines during the market downturn, and in the last few months there's been no volume. It's coming back in. This could be the Santa Claus rally we're talking about. And as the saying goes, don't fight the Fed. Now, has the Fed corrected the problems of the liquidity crisis? Have they stopped the flagrant overspending of the European countries, of Italy, of Spain? Have they reversed the entitlement philosophy that's been pushed over there for so long? The answer is no. But for the next 30 or so days, we should see a nice rally into the year 2012. The VIX finally today fell out of this channel that it's been in and above 30, down to 27 and change. The question now will be, can it approach the 200-day moving average in purple here and break through it? It attempted once before, was unable, went right back up into it. What could push it up in the next day or two? The European PMI is going to come in, and it's probably going to be pretty bad, down below 50, which is an expansion number. So this could act as a dampening on a further up move in the market, in the stock market. For what the Fed and the World Banks have done, though, it's going to buy us 30 days. The worry trade, the fear trade, is coming off. We break below this 30, the fear trade is coming off. Other economic news, being a retired pilot from American Airlines, the bankruptcy they filed was most interesting. It's a company with $4 billion in cash on hand. They're not strapped for cash. This is a ploy. They've been in negotiations with the 3 employee unions for 7 years and not come up with a new contract. It's another case of union busting, and not all that well. Case-Shiller came in. It was down, the housing index, but not the 3% that was expected, only 0.6%, 0.6%, which was bullish. Consumer confidence came in at the highest in 2 years, went from 43 to 56. Private payroll this morning, they were expecting 120,000 new jobs. They got 206,000. Be interesting to see on Friday where non-farm payroll comes in. If we get a number significantly above what they are expecting, we could see another 400-point rally. This could be the best week in 10 years for the Dow. Chicago PMI came in much higher. Pending home sales came in much higher as well. All good news. And once again, the AMR bankruptcy. Hewlett-Packard was raised to outperform at RBC. Coinstar to overweight at JP Morgan, and we'll take a look at Coinstar's competitor in the gold member section in a second. Potash, the ag chemical. With this rally in the equity market, the commodities will also rally. Oil is now above $100 a barrel. It'll also be going up more than likely. And Wynn Resorts was raised to a buy at Key Bank. How to trade this market from here? We're going to take a look at 3 or 4 ideas in the gold member section next.